The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, folks, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Well, we had kind of a bad opening out here. I got to 1812 on the S&P cash. We're still off 38 points at 1842, but it looks to me as there are a lot of signs that we probably have had a washout. That washout will probably last, they can last anywhere from 2 weeks to 2 months, so we'll watch. This has been fairly extensive, so we're talking about a 230-point move off of the Christmas highs on the S&P cash, and that is generally enough to wash anybody out that's on margin or a variety of other issues. So I suspect that we probably have, like I said, a low in for a while. Doesn't mean the market's going to go extremely higher, but I think we could probably work our way back up to a 50% retracement or something like that. Some stocks a little bit more. Anyway, I think that we're probably going to see that the worst is in, and I started buying things today, actually. So we'll see how those turn out. The risk reward didn't get any better here. We have basically two paths. Either the market starts to bounce and make ABCs to the downside, or the market just crashes. So I'll have, about 25% of my portfolio invested now. I have some stocks that are very defensive, even if the market heads lower or does nothing, actually. So we're setting up for that. I think that there's some reason to smile in some sectors of commodities. And we'll be talking about the rest of it. I got some day trades in. We'll see how those do. I'll be holding those till the close today. And I don't know what else we'll be doing, but that's a good start. As we said, volume almost 4 billion shares today as we start the show. And that's probably a pretty good indication that the blowout low is in for a while. 3.93 billion shares as we start the day in the show here. And that is the kind of capitulation that makes decent lows for a while, but not forever. I thought maybe we'd just go ahead and start making ABCs to the downside and start rallying out of yesterday. I had no positions either medium or long term or even short. In fact, I was all cash walking in this morning. And you can't give, what do they say? You don't want to look a gift horse in the mouth. I always wondered who said that? Where did it start? I don't even understand it. Anyway, we're off 41, 42 points off the worst part of the day. Could we go back there and close at the lows? It's certainly possible. Will we go back and test this low of 1812? I think the answer is yes. But again, the volume is so huge out here and overwhelming that normally that's an exhaustion move in the markets. So, could we get back up to 1950, 1975? I think we certainly could. A lot of people would think all the risk in the market's over, and wham, guess what? The next move comes back in to the market, and that's normally how this thing goes. Normally, everybody gets all nervous. They throw their baby out with the bathwater at the bottom. The market rallies. They wish that they were in it. They get back in it just in time to get slammed once again. Actually, I was eating lunch out yesterday, and I flipped the bartender at the bar. Well, normally I eat at the bar just because you can bug those folks. Your waiter can't run off and hide from you when you're looking for a quick lunch. And I had no positions on, didn't have anything or reason to think that I was going to add anything in the near future. But we'll talk about that. But anyway, put it on. There were enough people at the bar. I was wondering if anybody would comment. Anyway, flipped him a couple bucks. He put on CNBC. I wanted to see what the reaction was to people. One lady told me, "Oh, I can't look at it." I said, "Well, it's been going up for 5 years Haven't you sold? Oh, I don't retire for 5 more years. Can't you put it in cash? Oh, then I'd miss out. I thought, oh, okay. And then talked to a couple other guys at the bar that were there that are probably in their 30s. And they all, yeah, I'm trying to get into cash, but I don't know. So I figured we were probably in for some kind of low. Normally, the bar indicator is pretty good about that. Now we're off, 37 points. Do not be surprised. Everybody in the world is short, and I have an indicator we'll talk about in the webinar tonight to show you the proof of the pudding of that. And you still have plenty of time. We'll get into that also today. In the meantime, we got to get this party started. Oh, why can't I get this party started? Probably because I turned the volume down on the history. Let's turn that volume back up and try it again.
And it's all just a little bit of history repeating.
Anyway, what do we got going on? On this day in 1981, Ronald Reagan was inaugurated, and within minutes, the U.S. Embassy in Tehran, the hostages were let loose. And this goes to show you that being weak in foreign affairs never does a country any good. It was the 444th day as far as the Iran hostage crisis. I can remember kind of when it started, that Jimmy Carter, a much maligned and probably justifiably so president, he was a weak sister when it came to being a president. And he couldn't help but sell his soul to the devil, especially third world dictators, after he left to get cash and tell everybody their fraudulent elections were great. And took a lot of cash from those folks to do so. I think we can call him a disgraced former president. Anyway, this means that we are 365 days away from our next president being inaugurated. And I think it's going to be an exciting trip. People are, I don't know what else I can say about it, other than it is time to move on. We talked about our subscriber event. The time to be short is probably over, and we're looking at the next levels and how we're going to know when it's time to pull the trigger yet again. We'll talk about that in 5:30 tonight for a subscriber event. If you're part of either one of my newsletters, The Path of Least Resistance or The Tech Insider, you can do that. But we will be looking for stocks and other things, both long and short to go. Short, I'm going to be in cash for probably just a little bit in the Tech Insider as we wait for the market to set back up for the next shorting position. And I don't know what else you can say about that. We got a little bit more than we wanted or we were expecting. But you never know off the first move. But this does set the hook and tell us that we are definitely in a bear market and how we're going to profit from that, both short and long. We'll talk about that tonight. IBM got hammered, and for the most of the day, it was anywhere from 60 to 80 points off on the Dow. That made it somewhat problematic to see a market trying to bounce. We're off 36 points on the S&P cash. You have plenty of time to give me a call at 877-927-6648. Email me at path@tfnn.com or put a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, what happened there? Something happened. I'm not exactly sure what happened. Anyway, hopefully we're back. Yeah, I think it was one of these messy web pages that plays music secretly in the background. And I just killed them all. I don't know which one it was, but pretty horrible. And I couldn't figure out where I'd come back. But anyway, it was good music while it lasted. Goldman Sachs was out. And what else can you say? They had earnings that were fairly decent. It's off the lows of the day. You got to think that it was going to come back into this gap that goes back. There's a double gap, actually, that goes back to the April 11th, 2014 low. We touched that. That's where the real big move started on Goldman Sachs up to the 218.77 high of June 23rd. We're all the way back down to these gaps, which should act as fairly decent support. Energy on this last leg down, of course, was more. So none of these stocks I can play. In fact, I had like 6 stocks that I was going to look at today to play, and most of them gave me signals that said maybe, maybe not. So we were hoping to maybe find a few things to buy out there. I got a couple in the daily newsletter. A lot of people ask what the difference between the daily and the Tech Insider is. Of course, the Tech Insider is nothing but tech. The other thing is I expect that you should be able to buy within the next couple of, or sell within the next couple of hours in the in the path of least resistance. I figure that you may not be able to get in and out any quicker than a day in the Tech Insider. And so those have to have much more confirmed trades and also have to be stocks where they're not going to move against you very quickly. So you've got to wait for a lot of cause, and only the cream of the long-term crop in the Tech Insider, and of course it will be tech stocks. We made a lot of money being short on that, and now we're waiting for the counter trend rally to start putting more trends on. But this is a market that if you're playing, you got to be able to be in and out in a couple hours right now if you think that you're going to play for the bounce. Anyway, we've got some very neat stuff out here, and I think I bought something I've been waiting years to buy. So I'm going to feel better about it. Off 34 points on the S&P cash. And I don't know what else you can say about that. That 4.1 billion shares means, of course, that the 1812 will be tested. Unfortunately or fortunately, I think we're going to have a move in the market that will last at least 2 weeks and probably more like 6 weeks. I think it could take us into late February or early March, setting up the next time for us to pull the trigger short. Most of these stocks you do not want to touch, and that is if these things had energy from the last high down to the low, these things are poison. The surprises will come to the downside, so you kind of have to look at stocks. We've been talking about the last couple of days about confluence levels, and the way I like to play the counter trend rally if I'm going to short a stock. So we're going to talk a little bit more today about confluence levels. We'll talk a little bit more about the stocks that I was looking at this morning, and give me a chance to look at them again, and we'll see how they did. Anyway, stocks that look like they have fairly decent levels that are setting up for you to re-short. American Express, I will name this the American Depressed, has a great confluence level setting up around that $74 level here. We can show it. I'll hover my mouse around it. But if you missed it yesterday, we were talking about confluence levels. Hadn't been a lot of reasons to talk about them in the faux bull market of QE14, son of QE14 and QE Junior and QE Part 2, Tri, and Quad. Anyway, if you haven't seen it, it's basically two Fibonacci trends that come together, and you look at the 382 to the 618 of the next one, and if they are extremely close, in this case, we're looking at about 65 cents on American Express. If you take the highs, in fact, actually, if you take kind of the high of July 1st and the high of August 19th and use as your common number the January 20th low, you see how that sets up right at the 74 level over here if you're watching Tiger TV. There's also a little gap right there too, and that's what you love. You want to see probably this thing get into that gap, which is right around $74.64, maybe during that day, maybe get up to $76 and then pull back into this confluence zone in the next day or two to confirm the downside. And your downside target, of course, would be 61.28, which is the low of today. So we want to be watching that. And again, the energy on the downside was fairly brisk at 7.5 on my power law vector indicator number. So when this comes back up, I'm going to be finding the ones that went up on the lightest energy to pull the trigger on short. This is a possible. You know where my number is. I'll set up an alarm. If that thing gets up there to 70, it can ring me again. I'll see whether the volume was light, and we'll take yet another look at it. Let me check my email real quick. XBI wants me to look at biotechs real quick. REGN, which was in my newsletter this morning. I kind of like the setup on this one. There are a few biotechs out here that did have lighter energy down to the bottom, and I was pointing, I think, this one out today. Maybe it was yesterday. You've had a good, successful test of the previous low, September 28th, 435.60. 435.52. 3.1 million shares. You have it with about 700,000 shares today. So you got to like that. It appears it's closed back into the trading range. The energy really didn't come off enough to really make me jump up and down. It was slightly less, though, which probably gives you a good indication that you could get back up to a level that's just about $500 is the 382. I think I would probably, if I was going to play it, I would be out early rather than late on that one. You figure if it gets to 498.47, it's going to hit $500. I would put my sell order in at 498, and hopefully it hits the 382. Be out early if you're playing these counter trend bounces. Do not wait around until the party is over. What else do we have out here? Celgene, CELG. Let's take a quick look at it. This one's a lot more fuzzier. You had higher volume on the bottom, so I wouldn't say that that one is as good. Amgen out here. Yeah, this one actually held up better than just about everything out here. I don't know if you can really read anything to this. It basically did a little bit more than a 50% retrace off the December 16th high. So could you get back up to 165.23? I think you could. REGN probably looks the best, though. It gives you a much clearer picture. We'll be back in a minute. Send me email at path@tfnn.com. Call me at 877-927-6648. Put a message in the dim.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
$4.2 billion shares today says that somebody's going to blink before the end of the day. There's another indicator that I have we'll be talking about in the webinar tonight that makes me think that we're probably going to have a rip your face off rally before the end of the day. I can't guarantee it. I just think that it's more than probable than not. But by the end of the day, someone's going to blink. I don't think either bears or bulls are going to go quietly into the close today. So we'll probably get a good indication of what's going on, hopefully. off 41 points on the S&P cash. As I said, already 4.2 billion shares. So we're probably close on the way to a 6 billion share day on the New York Consolidated Tape, and that tells you just about everything you want to know. That is that this market is about as despondent as you can get. So what else do we have going on in the market? I wanted to get to a few other of these stocks. Here's a good example of a high in Bed Bath and Below that has a confluence range set up. These are the kind I don't like. This one's about $2 wide, but the nice little thing out here is that there's a gap right at the top of it. So normally, if I was thinking about pulling the trigger short on a stock like this, I'd want it to at least come up and get into the confluence range and at least probably touch the gap on the top of that confluence range. Probably a little, maybe, weirder things have happened. Again, when we look at some of the other things out here, let's see if we can get out here, is Beeve Aerospace. This one's been coming down for a while in the aerospace business. Another one where you have a real nice gap set up and also a very narrow confluence range at just over the $53 range. You got about a 50-cent range. It also happens to be a gap with huge downside volume. You'd love to see this thing get into that 53, probably in touch maybe 53.75, something like that, 53.80. That is the confluence range along with that. And weirder things have happened. You had a lot of energy to the downside on it. What you'll get is something that Richard Wyckoff, who's kind of the patron saint of price volume trading, called an automatic rally. It's a rally without a lot of preparation and not a test or the retest of the lows, all that kind of stuff. Normally, if you're going to get a good ABC down, you don't get that double signal of a real bottom. You just get a bottom. It rallies. It goes to some place logically like that gap and the confluence level, and you get yet another shot, another bite at the apple, as it were. Let's see what else we have out here. Just going to see if there's anything else out here. Oh, here's another good. I don't know anything about this company, the Corporate Executive Board Company. I wonder what these guys do. Got a good confluence setup, though. Let's see what these guys do. Executive and professionals in the United States, Europe, and internationally, it offers data analysis, research, and advisory services to senior executives and their teams to drive corporate performance by identifying and building on proven best practices. Well, I still don't know what they do, but apparently they do it. And there's a nice gap right around that $67 level. There's also very good confluence around that $68 level. You had extreme volume to the downside, and that means you don't play these for the bounce. You hope that they get back up here and give you a good fat swing with a curve with a fastball right down the center of the plate. That's $67.63 to $68.51. Buyback consultants? Okay. Otherwise known as scum. Okay. Another good one out here is the Cerner Corporation. Again, lots of energy to the downside. They look like they probably made some kind of low today. That sets up a fairly nice confluence range right back in where they came down with heavy volume. That is on the 4th of November. And what are they? You know, that was what? 9.1 million shares. And that sets up between 62.24 and 62.81 for your confluence range. That sets right up into that gap. I might want to see this thing go up into about 64 bucks and act extremely weak. And at that point, you might have a nice short to go back and test this volume low here on January 20th at $53.91. So a handful of stocks there. Let me also take a quick look at by mail. See if I got anything else. Got a gentleman that tells me where the saying of a gift horse comes from. It is in Roman slang. All I know of Roman slang is the history of the world with Mel Brooks. He had a lot of Roman slang in there. Basically, it goes like when you're looking at a horse, you look at its mouth to see how old it is and the quality of its teeth. And that is the equivalent of looking in somebody's mouth, a human's mouth, to see how old they are. And it's considered rude. Thanks, John, for that. And let's see what else we have going on here. We're going to look at a few other stocks. As I said, Regeneron Pharmaceuticals was in my newsletter this morning. It's in my list of stuff. One of the few stocks that actually did see lighter volume out here. We're going to start looking at some other stuff out here. ANP, how'd this thing do? ANI Pharmaceuticals. I was looking at this morning because, of course, it had a huge volume up day. That was on the 3rd of November, 2014, and that was on 1.5 million shares. Came back and tested it on October 22nd with 550,000 shares. When we look out here today, the last 4 days, 190,000 shares, 240,000 shares, 228,000 shares, 165,000 shares. So if you're thinking of biotechs, this may be one out here that you may want to take a look at. At least you got your back to the wall. Other stocks of interest, Aspen Technology. I was looking at this one because it also had another gap out here. And actually pierced it on August 14th with 4.5 million shares. In the last couple of days out here, kind of interesting as it fills that gap. AZPN, what is it? What do we got out here? 1.4 million shares, 1.6 million shares, 1 million shares yesterday, 883,000 shares today, 829,000 shares at the bottom of the gap. Like I said, the downside is that you do have one more low out here at $31.57, and that one could get spiked. It's the October 29th low. So, interesting. Bit Auto Holdings. Now, this one's kind of interesting. It kind of got a little bit more than I wanted out here, but things have been drifting lower since the August 24th test just a few days ago. Then 1.5 million, pretty light volume. You need this to close back into $22 to set that up. When we come back, Buffalo Wild Wings, TNA from Steve, and we'll be talking about some others. Plenty of time to give me a call or email me at pat@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Almost 4.4 billion shares. So this is going to be the biggest day I think we've had in a long time, several years. If this keeps up, 1843 on the S&P cash, off 38 points. And again, this can be one of these days where you see a rip-your-face rally off at the end of the day, as whether or not shorts think that this is over or not, and whether or not they just continue shorting and try to push the market down a little further. I've got a lot of evidence that says that there are some people that are going to have to cover their shorts in the QQQ and some other things before the end of the day, or they're going to get their hand slapped by the SEC. I'll be talking about that in the webinar tonight at 5:30. We'll talk about why. But if you fail to deliver shares that you've shorted in 3 days, the long arm of FINRA and the SEC will be about your head and shoulders, beating you senseless. And we're going to talk about how we can know that that's happening. Other things going on out here, dollar index is flat on the day, 99.02. And if we look at the indexes for crude off a $1.91, which really kind of started this whole thing, the gold has held up amazingly well, above this $1,100 range, 1104. And I may be thinking the other way on gold finally. What else do we have out here? Apple, it's just off a $1.20 now. I think it's hit its low. Let's take a quick look at it, and then we'll get back to some of these other stocks on my list. Yeah, I mean, this is pretty good. You know, you had a $1.6 billion spike on August 24th. What is it? 160 million, excuse me. August 24th. It got down to 92. We got into that candle today with basically 50 million shares. So we're about a third of the volume of that. That may be everything we need to get. That doesn't mean it's over. If you look at my power law vector indicator number, Apple is going to do nothing but bounce in a downtrend. 14 on the first leg up from that August 24th low to the November 4th high. 18 already on the way down. That means that you're going to bounce. Now, you got a gap just about 102. I thought it was going to gap first, maybe go up to 108, and then do its ABC, next ABC down. We didn't get that during expiration. What we did get, though, is this kind of washout with a light volume. That means that you're going to get your pop. The first level would be around 102. To me, this thing could probably get up to 108 if everybody starts telling long tails. And that's where I would probably want at least to do a 50% retracement on this one before I pulled the trigger short on it. But that heavy energy down from the November 4th high back down to this low probably today tells you everything, and that is that this is going to be working on building steam to break out that low, or at least go test it. Maybe it comes down there and test it with a lighter volume. Again, maybe that's all you need. What else do we have out here? This is an interesting company. I kind of like this setup just for the test of the previous low. Again, energy not light enough, I think, for me to pull the trigger on the last leg down. But the December 4th spike down to 121.01 on the Cooper Company, COO. Last 3 days have been into it with 930,000 shares yesterday, 558,000 shares today, 300,000 shares. So again, volume back at these lows, but man, you've got maybe 138 on this thing. And again, probably get back up there, get and fill at least part of that gap down from the December 3rd gap down. And next time, you probably get the energy to break out some of those lows. EFOI, Focus Energy. I was wondering of whether or not we would have a low in some of these energy stocks because the charts were starting to look fairly decent on it. You had a long-term gap up on EFOI that goes back to August 5th. Gapped up with 681,000 shares. The last few days, we've had 278,000 shares, 293,000 shares today. Much more volume, though, and that's where the fly gets in the ointment. But might have at least temporary lows. Still may get a bounce, but it disqualifies me as that having an ability to go higher. Edgewell, Personal Care Products. I thought this one was kind of interesting. It's been renamed. They've got some interesting stuff, but a safety stock, probably. I like the fact this thing had a November 13th low at $72.44 with 2.5 million shares. Got into it today. Has gone below it. Needs to close back into that trading range, but just 649,000 shares today. So, you know, let's say it ends up with 1 million shares or something. That's still a lot less than 2.5 million shares from that November 13th low. So some of those look like maybe we might have something. ERY looks like a blow-off top. What you would really worry about is a gap back down and having an abandoned baby out here in this. You know, you get it open like at 40, 41 or something tomorrow on the ERY, and you have to think that we've got a little bit of a reversal signal out here in the market. Still not getting much out here off 39 on the S&P, but 4.4 billion shares. So volume still coming in quite briskly out here. Let me look at a few of my positions, just making sure everything is okay. Yeah, look okay. What else do we have out here? EVR, Evercore Partners. This thing's blown through its gap. Let's go back and look a little bit longer. This thing's had a few gaps out here. It's filled them today. Let's look at the volume out here. Probably looking for less than 1 million shares. Last couple of 3 days, 613,000 shares, 694,000 shares yesterday. Today, just 359,000 shares. So getting kind of light out here. We'll have to see how the volume comes in at the end of the day. Energy's about the same on the way up as the way down. I was hoping for more. What else do we have out here? Hong Kong shares. This is where I'm thinking maybe we get our bounce tonight, and that is that the EWA did pierce and gap down on very light volume compared to its August 24th gap down, $17.57 on this ETF fund for Hong Kong. That was $17.57. We gapped over just 3.6 million shares today versus that 16 million. So you needed this thing to close back above $17.57 tomorrow. So you want to be watching tonight how Hong Kong does and whether or not we see some kind of a medium or median reversal number back out here. Okay, I think we get it. I think we probably also get it in the very last part of the day, because I think that there are a lot of people out here that probably will get their hands caught in the cookie jar if they do it. When we come back, we're going to look at Halliburton. A lot of people thinking they're finding a short in crude, and Well, I don't know. Doesn't look like I can get it here. We'll talk more about it when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. I was looking for something. I couldn't find it, which made me angry. You wouldn't like me. I'm angry. Anyway, volume still comes in incredibly brisk. We finally had a little pop through that resistance level at about 1845. We're now to 1848 on the S&P cash. Do not be surprised to see me out in the last few minutes of the day, spraying a big stream of market Vaseline, or not Vaseline, market Visine in the eyes of the market to get the red out, because I am thinking that we have a big run here before the end of the day. Anyway, 4.5 billion shares. And again, exhaustion moves like this come in a great deal, and probably a beautiful day for a teachable moment if you've not been in massively bearish markets before. A lot of times you'll say, okay, we had a low with high volume, and you go, okay, I've got to wait until I touch it. And the answer is probably not. You're probably going to get an exhaustion move. Everybody's been scared out of the market that had a share of stock. If they were weak holders, they are out. And if they're holding, probably going to say, well, I'll sell it when it goes higher, and they won't do it, and it'll come back down again, and they'll sell later on when the pain gets big enough to get those folks out. But do not be surprised to see us up another 100 points higher than this in the S&P cash before the next signal to pull the ripcord and say, Houston, we've got a problem. I'm going to mix so many metaphors that there's absolutely no chance that I won't win the award this year. And of course, we had the award ceremony last week, and once again, I got my digressing award, hands down. I'm still working on getting, of course, the mixed metaphor in, but I barely beat out Steve Rhodes this year, just barely. So I did get the award, but just it was very close. I'm trying to make sure that there's no chance next year of that mixed metaphor award going to anyone else. Lots of volume, 1850 on the S&P cash. We're off 30 points. We were talking about crude before the end of the day. And the only thing is, if you're going to get a move, you could get it. But I want to look at Halliburton out here for the oil services to give you an idea. It's not like you got clear sailing. This thing's going to do nothing but go up. Most likely today is going to get retested. So any kind of move that you get in crude is going to be probably, and oil service sector is going to be muted and have some very limited upside. Halliburton has a very, very, very good confluence level. Look at 36.08 to 36.28. What is that? A 20-cent range gives you a very good prediction of where in this thing could pop. Now, you know, what is that? $8.50 on its $27 stock. Not a bad range. I just hate going long stocks that had more energy down in the leg before they went up. There are other stocks out here that probably have a better chance of getting back up there. This much more likely I would want to short this sector back up at the highs. There are other sectors that broke previous lows on next to no volume out there. So just be forewarned. What else do we have out here? Back in the biotech sector, I didn't check my email here. Let's check it real quick. I got one more. I want to enter into DWTI shorting crude oil. Should I wait for a pullback? I think, yeah, you missed. I want to enter shorting crude. No, I wouldn't be shorting crude down here. In the meantime, sell when you can and cover when you can. We'll see you tomorrow, same bat channel, same bat time. My webinar tonight at 5:30.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.